Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from December 1st to December 5th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from December 1st to December 5th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Swiss retail sales data and US ISM manufacturing PMI. Tuesday brings Australian building permits, Japanese consumer confidence, and Eurozone unemployment rate along with the crucial Eurozone inflation figures including both headline and core inflation rates. Wednesday features Australian GDP data, Swiss inflation figures, Eurozone PPI data, US ADP employment change, US industrial production, and US ISM services PMI. Thursday includes Australian household spending and balance of trade, Swiss unemployment rate, Eurozone retail sales, US initial jobless claims, Canadian IV PMI, and Japanese household spending data. Friday concludes with German factory orders, Canadian employment figures including employment change and unemployment rate, US factory orders, and US Michigan consumer sentiment. This week's key market-moving events will be the Eurozone inflation data on Tuesday, Australian GDP figures on Wednesday, and Canadian employment data on Friday. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the Australian dollar against the US dollar and the US dollar against the Canadian dollar, as both instruments have shown significant technical breakouts recently. Let's start with the Australian dollar against the US dollar. Looking at the daily chart, the Australian dollar is currently trading around 0.6548, showing strong bullish momentum after a successful breakout. The price is moving higher above the 20-day moving average after breaking from below, which is a positive technical development. The stochastic oscillator is moving toward entering the overbought area, indicating strong buying pressure in the short term. Looking at important levels, the Australian dollar against the US dollar has support at 0.6485 and 0.6413, while resistance can be found at 0.6611 and 0.6689. Wednesday's Australian GDP data will be crucial for this pair. The GDP figures are expected to show growth of 0.6% quarter-over-quarter and 2.2% year-over-year. The successful break above the 20-day moving average is a significant bullish signal. The next key target for bulls will be the 0.6611 resistance level. Strong GDP data on Wednesday could provide the catalyst to push the pair toward this level and potentially higher to 0.6689. Now, let's turn to the US dollar against the Canadian dollar. On the daily chart, the dollar-Canadian dollar pair is currently trading around 1.3968, showing bearish momentum after a significant breakdown. The price is moving lower below the 20-day moving average after breaking from above, confirming a shift in trend direction. The stochastic oscillator is moving toward entering the oversold area, suggesting strong selling pressure but also potential for a near-term bounce. Looking at key levels, the US dollar against the Canadian dollar has support at 1.3820 and 1.3701, while resistance stands at 1.4144 and 1.4270. Friday's Canadian employment data will be crucial for this pair. The employment figures are expected to show 10,000 jobs added with the unemployment rate potentially rising to 7%. The break below the 20-day moving average is a significant bearish development. The pair may test the 1.3820 support level in the coming sessions. However, with the stochastic approaching oversold territory, traders should watch for potential short-term bounces, especially ahead of Friday's employment data. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Tuesday's Eurozone inflation data, Wednesday's Australian GDP figures, and Friday's Canadian employment data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.